Namaste to all dear warriors and students. Here I am with a new video relating to partnership accounts 1. It will be useful for inter students also, not only degree students. So in this what we need to discuss, we have already discussed in the previous video. Now we are going to see accounting treatment relating to admission of a partner, how to calculate uh, sacrificing ratio and new profit sharing ratio we have seen. Also we have seen in the previous videos treatment of goodwill on admission. Now general entries on admission of a partner. Okay, then we will see preparation of necessary ledger accounts also. First in this video we are going to cover general entries on admission of a partner. So let us go to that one. Here are the general entries on admission of a partner. Okay, first, for capital brought by new partner, cash account or bank account debit to new partner's capital account. You will write the narration being capital brought by new partner, right? That one come will here. Then goodwill treatment in the books of admission. Situation 1 or case 1, goodwill privately paid by new partner. So there will not be no general entry is required for goodwill paid privately. Situation 2, goodwill brought in cash by new partner and retained in the business. If nothing said, we will assume it is retained in the business. For this purpose we need to write two general entries, that is first one for goodwill brought in by new partner in cash or bank account debit to goodwill account. Okay, next for goodwill retained in the business. Okay, goodwill account debit to old partners capital account. Suppose here we can say A and B are old partners, C is new partner. Then what you will do, goodwill account will be debited to A's capital to B's capital, to A's capital to B's capital. That is how you will write. Okay, in their old profit sharing ratio it will be shared. Okay, which will be given in the question. If not given, we will assume it as equal. Next, if it is goodwill situation 3, goodwill brought in by new partner and withdrawn by the old partners. Okay, general entry A and B save as above in situation 2. That means we will write these two entries, that is cash account debit to goodwill account and goodwill account debit to old partners. Later one more entry, third entry, that will be this one C, for goodwill withdrawn by old partners. Old partners capital account debit to cash or bank account. As in the same example as we discussed, it will be A's capital account debit, B's capital account debit to cash or bank account you will write. Okay, this will be the general entry. Okay, if situation 4 is there, goodwill raised, created or valued in the books of accounts. Generally this type of situation will not be there. Only few intermediate books it will be there, because at degree level we will follow the accounting standard. As soon as goodwill is valued, created, it should be written off. So situation 5 will be there, mostly situation 4 will not be there. So situation 4 is what? Goodwill account debit to old partners capital account. Okay, goodwill created, valued or raised in the books. Old profit sharing ratio, goodwill will be debited, and old partners, that is 2A's capital, 2B's capital, 2A's capital, 2B's capital, like that you will write credit. Okay, so that is the general entry. And please remember, in this situation goodwill will appear in the balance sheet if only fourth situation is there. But generally once we create the goodwill, okay, it should be written off immediately. So goodwill, when we value this entry, we will write goodwill account debit to old partners, that is 2A's capital, 2B's capital, example के लिए right, in old profit sharing ratio. Once it is written off, okay, all partners capital account for goodwill written off, all partners capital account debit to goodwill account, that is here including new partner capital account will be debited, that is A's capital account debit, B's capital account debit, C's capital account debit to goodwill account will be the general entry. And here we will use new profit sharing ratio. In this situation, calculation of new profit sharing ratio is required. So one entry for valuing, another entry for written off. This is when goodwill is valued, this entry, as well as this entry you need to write for writing off. Two entries will come. Here you use old profit sharing ratio, here you will use new profit sharing ratio. In old profit sharing ratio, old partners capital accounts will be credited. In new profit sharing ratio, all partners capital account will be debited. So modern accounting techniques, okay, who use modern accounting, they are saying, instead of writing rising and written offing, we will adjust it through capital accounts without raising goodwill account in the books. Okay, goodwill adjusted through capital accounts without raising goodwill in the books. goodwill को रेज करे, राइट ऑफ करना पड़ता, right? Instead of that, what they are saying, don't record the goodwill name in the books, but get the goodwill into the books. So for that purpose, what they will do, new partners capital account will be debited, old partners capital account will be credited. Here we use sacrificing ratio, and new partners share of goodwill only will be taken into consideration, not entire firm goodwill. For writing of valuing, you will take entire firm goodwill, but for without raising the goodwill, we will take only new partner shares. Suppose here in the example, C's capital account will be debited to A's capital to B's capital. In which ratio? Sacrificing ratio. How you will get sacrificing ratio? Sacrificing ratio is equals to old ratio minus new ratio, which we already discussed. So these are the basic and general entries. Then Next comes the revaluation of assets and liabilities when asset value increased. Asset account debit to revaluation account. Only with the increased value we need to take. Okay, if they give by word increased by, take the value which is given in the adjustment. Okay, increased at or valued at or to, ऐसे बोल रहे तो टू एट बोल रहे तो we need to take difference. Okay, in this call it difference between balance sheet value and adjustment value. Difference increase or decrease we will consider, right? So this is the asset when increased. When asset value decreased, revaluation account debit to asset account with decreased value. Next, when liability value increased, revaluation account will be debited to liability account. Any new liability, okay, suppose there is unrecorded liability बोल के बोलते, now you record through revaluation to liability account. If there is any unrecorded asset also, asset account will be debited to revaluation account. When liability value decreased, liability account debit to revaluation account. This will be the general entry. Only with decreased value and increased value we will consider in revaluation. For revaluation expenses, okay, revaluation account debit to revaluation expenses account, revaluation expenses account debit to cash or bank account. Instead of these two entries, people will write one entry. यहाँ पे revaluation expenses credit हो रहा, यहाँ पे debit हो रहा. Instead of that they will write revaluation account debit to cash or bank. Like that also you can write revaluation account to cash or bank. One entry they will write, no problem. For revaluation profit, revaluation account debit to all old partners capital account, old profit sharing ratio. In case of loss, above entry will be reversed. So that will be like this: old partners capital account debit to revaluation account, being revaluation loss transferred to partners in old profit sharing ratio. Then if there is any accumulated profits like general reserve, P&L account, general reserve account debit to old partners capital account, A account, 2B account, like that. If there is any P&L account balance, P&L account debit to old partners capital account, 2A capital, 2B capital, like that we will write. So these are the general entries which come in case of admission. So this short video will be helpful for you all in writing the general entries relating to admission. And in the next video we are going to see what are the ledger accounts prepared for revaluation of assets and liabilities. So hope this will be useful for you all. Thank you. Jai Hind.